morning. You're watching The Market right here on 18 Hour with me, Ashraf Faridi, Aman Dabash, Anisha Jain in the studios. And the global setup seems pretty much intact. Not like our markets are really taking or deriving any cues from that. We continue absolutely quiet. We'll talk about our markets in a little bit. But yeah, for Wall Street at least, you've seen third days of strong gains coming in. The S&P has managed to notch its best days since June 2023. The Dow has closed in higher by nearly about 300 points. And it's the Nasdaq which continues to outperform. That's seen a big move of about 1.7%. Later in the show, of course, we'll discuss why the disconnect, because typically a Nasdaq rally also means some rub-off for Indian IT sector, but that's not quite happening. It's not happening for IT, it's not happening for the overall markets as well. Yields, though, overnight have retreated a little bit on hopes of perhaps Fed stance easing a little bit. And of course, now all eyes are on the US GDP data, the home sales data. That's going to be something that the market is going to be deriving its cues from. But for our markets, ladies, it's flat as flat can be, and that's once again what the GIFT Nifty is also indicating.
Yeah, it's been such a boring kind of market. We've been struggling to find areas and spots of, outperformance. But yesterday, at least, there was chemicals that was outperforming massively, and then real estate was also doing all right. But other than that, at the index level, it's been fairly quiet throughout the trading session. And we were trying to make up our mind whether we want to stay in red or green, because the Nifty managed to change the directions almost 8 times. Having said that, we were trading in a very narrow band. What was actually doing well yesterday was some of the private banking names, and specifically HDFC Bank. That was one of the top contributors. In fact, over the last couple of trading sessions, we have seen that HDFC Bank has been outperforming a bit. Reliance, that continues to be a bit of a drag. That entire AGM was something that did not lend too much support for the market at all, because it didn't talk about any kind of unlocking, etc. And that's the reason we saw that Reliance was one of the biggest drag. Of course, in the July-August series, Nifty hasn't gained even 1% in even one session. So that's the kind of narrow band that we have been witnessing. We've just been trading around 19,200, 19,400. And of course, August is now drawing to an end. And after 3-4 months of massive outperformance and good gains coming in, August is turning out to be a month wherein we have seen a bit of a blip. It's been very soft, and it seems like we'll be ending the month of August on a bit of a red tinge, Aman.
Oh, yes, indeed. That's what it pretty much is looking like. As you said, yesterday as well continued to remain a very flattish day of trade as we wrapped up the day doing precious little for the frontline index. But yes, one spot where you did see a lot of fervor, and that has definitely been the entire chemicals basket. So pretty much put your finger on any of these names, and they were a buzz in yesterday's trading day. The 5-day, the volumes as well that we saw was quite decent, and the kind of price action as well that we witnessed clearly showed that these stocks were in the spotlight on the upside. And there has been a smart recovery as well that we've seen in certain prices of chemicals. We've seen, for example, acetic prices, that they have seen a sharp increase from about 57 a kg to about 72 rupees a kg. You've also got light soda ash prices in China that have risen, and the expectation is that the China demand will likely improve and curb predatory pricing. So with the pricing pressures receding to a certain extent, that bodes well for a lot of these chemical players. So they are seeing quite a bit of healthy traction on the back of China plus one. Even in terms of what the experts are alluding to, they're all talking about how by about Q4 of FY24, we could see a decent recovery even when it comes to the financials of a lot of these names. So the likes of Balaji Amines, Sumitomo, Aarti Industries, Deepak Nitrite, they were all abuzz in yesterday's trading day. But stocks aside, Aisha, let's also put the spotlight then on the kind of commentary that came from the finance minister. And all in all, it seemed positive.
Yeah, I mean, she's stating that inflation is not broad-based, and I'm going to pick up that point first. While talking about India's growth, of course, on the longer term, she continues to be hopeful and, positive about the private sector participation. But inflation, considering that's the big niggling worry, stating that some individual commodities may see a price surge, and all the perishables and also vegetables, because they are all short duration, and because of the way the monsoon has progressed, inflation can see recurrence as well. But overall stating that the basket itself is pretty much steady. And that's pretty much what we've been maintaining, right? I mean, be it tomato prices or onion prices, that's only but a transitory phase or escalation in prices because of an aberration in monsoon. Linked to that, what she's saying about interest rates, whether that's going to ease or not. And I think that commentary is pretty important, saying that I'm not sure what the thinking is, but I can see that the discussions, we're not for keeping it high for very long. There are other parameters which are also coming into them because after, let's say, a bit of a time lag, when they release their minutes, you've seen that the discussion, it doesn't go on those loops, thankfully. So stating that interest rates are not going to be escalated for a very long time to come. The important thing from market perspective is, on the short sellers, where she's saying that it's a question of short sellers who take a position, bring down the valuation, then again send it up and then make a killing. There are some others who can properly take similar lines to make a killing out of the markets. But what she's looking at, and I think this is important, is SEBI, she says, that all eyes are on SEBI, the market regulator. With what it does, is able to see the grain from the chaff, and regulatory tools, if used properly, coming out of this can lead to better corporate governance. And I think that was an important question at a time when we've seen what short selling has done to certain sects of stocks in the market. But yeah, pretty much a drawdown from what we've been talking about.
Yeah, similar commentary coming in, but while there's not much happening in the markets, there's a lot happening beyond the markets, and I'm talking about the cricketing world. The online ticketing for India matches started yesterday for MasterCard users. Of course, it's been happening in a staggered manner.
My show has crashed already with this.
Yes, with that moment at 6 p.m, the website crashed.
Are you surprised?
Not at all.
No, not at all. But then, they were talking about how they're well prepared this time around. They're doing it in a staggered manner. The hopes were high that probably we'll somehow try to decode how, if 100 crore people together go on a platform at the same time, what could happen. And that's exactly
with
what
a
happened.
9-hour wait, mind you, for
yeah,
some
that's
other matches.
what happened. So, I mean, the way, and I was talking to a lot of people yesterday about it, whether anyone managed to get the tickets. Hardly anyone. It started with showing waiting of maybe 15-20 minutes, and rather than coming down, it kept on going up. And at one point of time, for people, there was waiting of more than 9 hours, 8 hours, 6 hours. So, it's just difficult to get the tickets, ladies.
It is.
Yeah, it
I
is.
mean, you had New Zealand matches which were going for already 6,000 or something for those who actually got there. But yeah, fingers crossed. Hopefully, we should get ours after that 9 or 10 hour or whatever long wait. But Vinny is here to tell us what the global commentary has been. I'm sure it's not on cricket, Vinny, but what's the globe thinking about how the macros are positioned right now ahead of very important data overnight?
Absolutely. The important point that in the global market and most of the commentary that is coming in is on the JOLTS data, that is the US data, that in terms of the vacancy, hiring, jobs data over there. So now what the main highlight is coming, and Mohammad Al Arian is firstly, he's highlighting that this data actually indicates that the job market is not quite strong as of now, and employees are not leaving their jobs. They cannot just quit randomly and find another job because it's not so strong. But that doesn't mean that companies can also have that power to, in terms of firing people as of now, and they believe that the counting on ease of hiring when profits will start improving is something that the company should also watch out for. Other than that, he's also highlighting in terms of the UK's shop price inflation that has fallen to the lowest levels in almost a year, and that is the figures from August shows that the food is the biggest driver for the rise in the annual rate, and that's dropped to 6.9% as well. While obviously they having lagged, the UK is following others in terms of experiencing moderating goods inflation as well. Other than that, we have commentary that is coming from Peter Schiff as well. That also is highlighting in terms of mainly the inflation data that is coming in there in terms of how the UK is actually finally seeing moderation in terms of the goods inflation, and also seeing future inflation prospects depend on more on what's happening in the service and wages as well. We have David Rosenberg, who's commented on the US JOLTS data, that is also highlighting that there is a decline in terms of openings, hirings as well as quits, and an increase in terms of the layoffs as well. And it has happened that the grand total of 4% of time in the past, and just 2% when the economy was not in a recessionary state. So maybe that is a factor that one should watch out for. Maybe it is in the recessionary phase, is what he's highlighting. Even Holger is highlighting in terms of the 2-year yields that have plunged by 15 basis points following the weak JOLTS data, a number that is actually fueling some bit of a recession fear, and that is what everyone is keeping an eye out on.
Thanks very much, Vinny, for summing up all of those details. That's what some of the global commentators are saying. But let's put the spotlight on levels, top stock ideas. And for that, we've got our chartist standing right by. We've got Kunal Bothra as well as Naresh Mirani. Okay, let's connect with you first, Kunal, and get in a sense as to what you make of the markets. We're calling it boring, dull, listless, what have you. But are you pleased that at least we're in consolidation mode and not grinding lower from these levels?
Yeah, I think there are two ways to look at it. That we are not falling on the indices, that's a good sign. Lack of participation from large cap names, that's not a good sign for the markets. But then at the end of the day, we are still into a range of 100 to 100 points. So there are multiple ways to look at this market right now. That after 5 straight months of successive price gains for the index, from the March lows of sub 17,000. On the Nifty, we managed to climb up to almost 20,000 in a matter of 5 months. So this could more or less be a resting period for the indices or a broad consolidation which is going on. There is also a lot of sector churn which has happened. Many of the erstwhile strong performing sectors like the auto, the private sector banking stocks, etc. These sectors have taken a pause, and now you're seeing emergence of new beaten down sectors. For example, chemicals made a good comeback, metal stocks have made a good comeback, power stocks, etc. have been doing exceptionally well. So I think it's more of a phase of a churn across the markets which is going on. In terms of the levels, we've been mentioning that from a very short term play, 90,300 and 400, that's a tight range for the index. So if you happen to open above the 90,400 mark today, the view would come back towards going long on the indices. And if we close below the 90,300 mark, then we could probably be initiating fresh shots on the index.
Right, okay, let's take it across to Naresh. Naresh, of course, has found the market that boring that he took leave yesterday. But that aside, Naresh, what are you making of some of the private banking name underperformance that we're seeing right now? What's the call in the Nifty Bank?
So, on the Nifty Bank, it has bounced back from that 43,800 to 44,000 mark, which was the support. And now we watch out for 45,000. That's a upper side target. And once we cross that, that is where the trend changes. Same thing on the Nifty, 19,250, 19,300 has held on. And 19,600 becomes a price point, which is where we change trends. But what is interesting is when we look at the broader indices, if we look at the Nifty 500, the steepness of the current correction is much more flatter. The Nifty 200, much more flatter. And if we go to Nifty mid cap, Nifty small cap, we've not seen a similar correction. We've hit new highs in the previous few weeks. So it's because of a few heavyweights the index continues to lag. For example, Reliance Industries has gone nowhere. You have HDFC Bank going nowhere, 25% of the index sideways. But we are getting the first indications of some recovery across the heavyweights as well. So the view now changes to buy on dips and keep a stop loss below 19,250 and preempt a possible move above 19,600.
There you have it. Those are some of the projections on the frontline index. Nail it down then to stock-specific calls. And Kunal, what is it that you're looking at today?
So I'm betting on NTPC on the short-term charts. Stock is trading at 220 plus mark. Yesterday it closed at the higher point of the day. So it's a rest buy with 230 as a target, expecting the stock to get into a breakout. Stop loss at 216. And Deepak Nitrate, in fact, many of the chemical stocks managed to see a very good breakout yesterday. So I had given Tata Chemicals as a buy yesterday. Today I would probably bet on Deepak Nitrate from a short-term play, targets of 2,300, stop loss at 2,100.
Right. Naresh, what are the stocks that you're betting on this morning?
So first is a buy on Indraprasth Gas Limited, IGL, which saw a sharp reversal yesterday and over the last 3-4 sessions has made a bottom and given an indication of a reversal candle. So out there expecting this move to continue towards 490, stop loss at 450. Second is a buy on LIC Housing Finance. Now this is a stock which looks very promising on a longer term basis. The stock has made multiple tops around 440 over the last couple of years. So looks promising for a multi-year breakout in this case. So eventually could be a much bigger move. For now, a target price of 480, stop loss at 415.
Top recommendations coming in from our charters, but let's get stock specific and discuss the stocks which will be in news today. Somit is joining us in the studio for that. Somit, of course, Zomato will be in focus. There's a news flow that there's going to be a further sale of block from SoftBank perhaps, but apart from that, there's HSBC which has actually upgraded the target price.
Well, yes, Zomato block is in pretty much on expected lines. SoftBank is selling close to 1.17% stake And there's a 45 days lock-in, but there are also other investors who had received shares because of the Blinkit merger. So they might also come ahead and sell their shares going forward. So this would be the stake sale when it comes to Zomato would continue even going forward. But the important thing to notice here is that at this stake sale of 1.17%, the discount that the broker is given is next to zero. The shares are trading at 94.6 and the block will be happening at a price of 94 rupees. And what I have heard after speaking to multiple brokers, the demand was very strong for Zomato. The book was filled in like 12 minutes. And that's clearly being reflected in the fact that there has been least discount given at the Zomato block. Now the demand is very high for the shares and that would continue to remain given the fact that in Q1 the company reported profits. They have also started now charging platform fees which could boost their EBITDA by around 40 crore rupees per quarter. And today HSBC has also come out with this bullish note where they have increased the target price to 120 from 102, and this is because they are now expecting Blinkit business to be much more valuable compared to the food delivery business. They are valuing Blinkit at around $5 billion and they are saying that in the next 3-4 years Blinkit could easily achieve an EBITDA margin of nearly 3 to 4%, and they are saying that the hyperlocal can be a much bigger business in terms for Zomato as compared to the food delivery business, and hence HSBC is quite bullish on this counter.
Okay, there you have it. That's the block deal and that HSBC news as well, or note rather, on Zomato. But let's move aside from that, Sumit, and discuss what's happening with cement prices. And the channel checks indicate that on a month-on-month basis, there's been a decline.
Well, on pan-India basis, the decline is around 1%, but the key important thing to notice here is that in the southern and the eastern region, the prices have declined by around 3 to 4%. In other regions, it is quite flattish. Now, historically, Q2 has always been a lean period, so prices in this quarter don't matter much, but it at least gives us a trend of how prices would pan out going forward. And one important thing to notice here is now how demand pans out going forward, because post Q2, which is the lean period, demand usually picks up, and given the fact that election year is also coming, so what street is expecting is that there could be a double-digit volume growth going forward as well. On the cost side, what we are understanding is that cost has increased for the cement companies, given the fact that coal prices were up around 7% after touching their lows of around $94 per ton in the month of July. The prices have increased by around 7% on a month-on-month basis and are now hovering around $119, $120 per ton. Now, the companies which have most exposure toward the southern and the eastern region are Dalmia Bharat, Ramco Cements, Heidelberg India Cements, Nuvoco, Orient, Sagar, Star Cement and AC. So these companies would remain in focus given the fact that they have a high exposure toward the southern and the eastern region, and those are the two regions where the price cuts have been steeper at around 3 to 4%.
Okay, and then you've got a new IPO as well opening. Tell us all about that, Rishabh Instruments.
Well, the most interesting thing about this IPO is that Prashant Jain has invested. Now, last time when he invested was in Senco, that we know, and that stock gained around 27% on listing. Currently, it's hovering around the same price. While this IPO, if you see the issue, what they're planning to raise is close to 440 odd crore rupees as far as I remember, and the price band is around
418 to 441.
Yeah,
They're raising about 490 crore rupees in total. Yeah.
Well, yes. The most important part was that Prashant Jain has invested. So this would be an interesting listing and an interesting IPO.
And did you get a chance, Amit, to get tickets for the World Cup? Yeah.
Well, no, definitely no.
Did you even try?
No. I did.
Knowing
Those were just forwards. I thought those were screenshots from your own experience.
No, I was not trying. My friends were trying, so they did send me this. So.
Yeah, but I don't think any of us or anyone at least that I know managed to get a ticket, but at least we'll be able to get an IPO subscription for Rishabh for now, because it looks like, just to brief the viewers, it's the company which is engaged in manufacturing, design, development and testing of measuring instruments. It has 3 manufacturing units. Of course, the IPO will be opening today itself. Total issue size of around 490 crores. And this is for the purpose of financing the expansion, which they're doing in Nashik, as well as the general corporate purpose. So we'll be watching out for that as well. So those are the stocks that will be in focus, as well as the sectors and ideas that you need to have on your radar. But shifting focus, and thank you so much for being with us in the studio, but now shifting focus and talking about what's happening with Hero MotoCorp, because we understand that there was the launch of Charisma that happened overnight, and the demand for the upcoming festive season is something which has them quite excited as well. Let's listen in to what the management had to tell my colleague Sumit.
Your perspective, see, we already have strong products in entry, strong product in the deluxe segment. You talk about HF Deluxe, you talk about Splendor Plus, Super Splendor, Glamour, Passion. We brought in, of course, the Glamour and its own classic avatar and Passion again, which we relaunched. So you see that part on a portfolio basis is very strong. So where our job was to build portfolio in the premium, while in the entry and deluxe, it will be more about the refreshes, which will keep coming.
Talking about your electric plan, well, Vida is definitely there.
Yeah.
And going forward, so what's the plan to have more electric launches? Also, would you like to bring in the lower category, as we have guessed before also? So what are the plans over there?
I think the first target there is to go cross 100 cities by December, which is what we have said and which we are well on track on that. Thereafter, we are going to put products in the mid and the affordable segment. So that will be the plan for, let's say, fiscal year 25. Fiscal year 24 is about 100 cities, and fiscal year 25 is about putting product at mid and affordable segment, because right now our product is at the top end of the EV market.
And talking about the overall economy, the monsoons we saw recently, they were erratic, and in certain areas monsoon rains will not be that good. What about that? And also inflationary pressures we are seeing across the country also. How do you see these two challenges and other challenges that are facing economy?
See, monsoon, I would say, is a short-term thing. If you look at, there are multiple other fundamental factors which are strong. And I was talking about the capex spend, government capex, 3 years, 20 lakh crores, a huge spend. Now that spend benefits employment, benefits income. We are already seeing, whether we look at the entertainment industry, hospitality industry, doing very well in the tier 2, tier 3 cities as well now, or the rural areas. So the demand will come back. It's only a question of time. And we are very positive about the prospects of festive season.
And we have seen recently your competitor TVS unveiling a bike at very upper segment to electric bike.
Yeah.
Bullet is coming, electric plans Royal Enfield has for later time. So Bajaj is already there. What about the competition? That's a question we ask you every time.
Look, it's good, because in a segment when there is a lot of excitement, you always find the category expanding. That's always been the history. If you look up any segment, if the segment is dull and there's no excitement, the segment starts to stagnate. So therefore, more the merrier. I think people will compete against each other to provide better value to the customer, and the customers will have a field time getting the most innovative products in their hands.
And festival
that
season
augurs well for the two-wheeler industry.
And festival season is just around the corner now. So what about the sales? Will this month, in the month of August, we will see the demand for festival season coming, and what about the overall outlook for this festival season?
The festive period in India, the bigger festive period starts from the Navratras, so which I guess is around middle of October this time. So that's when you will see the festive season panning out. Right now, of course, there are individual festive days in different parts of the country, but the big festival in middle of October onwards, and we are very optimistic and exuberant about the prospects of the festive.
And from one corporate voice to another, as we take a break, let's hear out an exclusive interaction with ONGC Sushma Rawat as she lays out the future plans and ways to monetize the exploration fields.
We are trying to chase up big discoveries in the known areas like Mahanadi, like Kaveri, then Bengal, as well as in Vindhyan. So, but in the offshore, the chances of having bigger, sand layers or bigger extent of the pools is more. So we are trying to focus there also. And in Andamans, we did have success in the 90s. So we are trying to sort of again venture there, come up with more number of zones or more gas-bearing strata. So I think, there have been success around Andamans for Myanmar, for Bangladesh. So we are trying to bring in the analogy from these areas into Andaman, do the plate reconstruction, in terms of G&G, where the sediments can be better. So all these studies are going along with the acquisition of new seismic data, which has already been completed.
Question on your capex, especially on discoveries, let's say for next 3 years.
See, the overall exploration capex, if I say for the next 3 years, is been kept at 30,000 crores, because we are expecting to go and have more kind of data acquisition, seismic as well as non-seismic, and also the number of wells currently which we think we can complete up to 112. So that number next year is definitely going to be much higher, around 140 and 50. So keeping that in mind, we have tried to keep more into the capex expenditure for exploration.
Back with the market right here on ET Now. Flat is how our days have been at an index level. A lot of individual excitement, of course. A lot of block deals today too. You'll see another one from Zomato. The chemical sector has been in focus, and the Adani stocks as well have been pretty active. But today too, you've got the GIFT Nifty indicating a very, very flat start for us. One amongst the key events to watch today is going to be the SAT is going to be hearing Z promoters' appeal against the SEBI order after they were barred from holding key positions in the group firms. My colleague Ankur Mishra joins in on what to expect today. Ankur?
Securities Appellate Tribunal is going to hear the plea of Puneet Goenka as well as Subhash Chandra. Now this plea has been filed after SEBI has detailed a confirmatory order. In that order, it has been mentioned that Puneet Goenka cannot be CEO of the merged entity after Z and Sony. Remember, NCLT had already approved the merger of Z with Sony. However, the questions were raised who will be the next CEO of the merged entity after SEBI has said in the confirmatory order that Puneet Goenka cannot be CEO of any kind of merger. Now, from the side of Puneet Goenka, what we understand that contention will be made that how can the market regulator pass an order which is a kind of an indefinite thing till the time SEBI completes the investigation. So on those grounds, we understand that the counsel of Puneet Goenka will present their case. Now all will depend on this outcome by a Securities Appellate Tribunal, because that will also decide the fate of who will be the CEO of Z and Sony.
Okay, Ankur, and we'll wait by to hear what comes out of that SAT hearing. It's expected around 11 a.m. today, so stay tuned to ET Now. We'll keep getting you the latest with respect to this development going on at Z Entertainment. But we are getting you the latest and in these exclusive details from Enforcement Directorate as well, because what we understand from sources is the fact that Enforcement Directorate's investigation on Adani Group stocks has revealed that a dozen of FPIs have been profiteering by the short selling of the Adani Group stocks. Let's go across to my colleague Sharat to understand better as to what the report findings are. Hi, Sharat.
Well, yes, in focus we are having Adani Group, and what we are hearing from our sources is that Enforcement Directorate's investigation has revealed that a dozen of FPIs and FIs have actually profited from the short selling scene in the Adani Group stocks. Apart from this, out of these 12 entities, 4 are based in Mauritius and the remaining are actually based out of France, Hong Kong, Cayman Islands, Ireland as well as London. Apart from this also, none of the FPIs or the FIs are actually disclosed their ownership structures to the income tax authorities. Apart from this, earlier the Supreme Court appointed expert committee had actually stated earlier that the short sellers had made profits and were active on the Adani Group stocks. Apart from this, between June 24, 2023 and the dates of February 27, 2023, the market capitalization of Adani stocks dropped almost 12.4 lakh crore rupees or almost $150 billion. Lastly, the maximum damage was caused to the retail investors. So important development coming in.
All right, thanks for that, Sharad. Let's move right on and put the spotlight on pharma, in particular Cipla, which is in the spotlight on the back of the Jefferies note. The House says that PE firms like KKR and CVC Capital have seen success with investment in the company. Let's get in Vamakshi, who joins in with the details. Vamakshi?
Cipla is in focus now. Of late, there have been reports suggesting that there is some PE interest in Cipla for buying nearly 59% stake, and this deal could be valued at over $6 billion. Now, we have a note coming in from Jefferies on the same, and they have highlighted what a potential Cipla buyout would actually mean. They've analyzed past transactions and come out with this analysis, and in fact, they've highlighted that PE firms such as KKR, CVC Capital, they have seen success in their investments, especially in the listed mid-sized healthcare companies such as Max Health, JB Pharma, as well as HCG. Now, traditional strategy is to bring in a new management team, cost restructuring, as well as acquisitions, which could actually drive an operational turnaround for the company. And this generally is followed by a valuation re-rating. Now, PE firms in the listed healthcare companies have actually paid rich dividends. In fact, PE interest in Cipla, if culminated, would actually require patience and an out-of-box strategy, is what Jefferies has highlighted. And that is because Cipla is already run professionally by a CEO called Mr. Umang Vohra, and he has managed to build a very strong US generics business and investor returns till date as well. Apart from that, they also believe that Cipla offers limited cost control measures as its margins are already in comparison with its peers. So largely, they believe that an investor would have to come in with a very long-term view and some out-of-box strategy ideas. So all in all, on the back of this brokerage note, keep an eye out on Cipla.
Right, Vamakshi, we'll leave it at that. Let's also shift focus to Emami management meet, and Nuvama has come out with a note and shortlisted the key takeaways as well. Vinny is here to walk us through the same. Vinny?
Yes, talking about Emami, just want to, before we take the highlight, let's not forget how the stock has also performed, and compared to the Nifty FMCG index, which has gained over 1% in the last 3 months, Emami has seen an amazing performance. It's been the top gainer. 30% of the gains have seen coming in for Emami over there. Now, yes, in terms of the highlights that have come in, yes, healthcare, they said, is likely to perform well. They're witnessing gradual recovery in other rural areas as the distribution channel is widening. Now, they have 60,000 villages by the end of FY24 is what they're expecting. So, rural recovery is something that will further improve for the company as well. When you look at it in terms of the modern trade and e-commerce channel, that accounts for around 19.4% of the business, that is expected to grow at 15 to 20% with improving margins, is what the company highlighted. Also, in terms of the Dermicool acquisition, D2C is scaling up well for the company, is what the highlight is coming in. New product developments is to account to around 3% of their FY24 business, and EBITDA margins are to rise by 200 basis points on a year-on-year basis in FY24. So, improvement in margin is also what we're expecting, growth is also what we're expecting, and promoters pledge, that is to dip to 33%, from 33% to 18 to 20%. That's a dip that we're expecting in the promoters pledge as well once the hospital transaction goes through. So Nuvama, after this, is maintaining a buy, hike the target price to ₹660 per share from previous ₹550 per share.
All right, Vinny, thanks for those details. Let's move right on and hear it out from Nischal Maheshwari, the CEO of Centrum Broking. He shares some of his top bets within the insurance space.
We like the space. The only thing is basically there is severe competition actually, and that is what keeps us looking for stocks in the space basically which are reasonably priced. And our top pick continues to remain as SBI Life in that space, and then we like Max and then HDFC Life in that order. But positive on the space. There's huge competition basically. Yes, they are getting that there's market share or holding on to the market share. I'm not really looked at the recent market share of LIC, but I think they're holding on to the market share. But the competition is really severe in LIC, in that insurance space. And the second thing is basically that is the one large company which is still available with the government to actually keep on coming in. I think the stock overhang. So as and when government finds a good price, I think government will take away some more into the market.
Okay, let's move on and let's discuss what the market has in store for us, both in the near as well as the medium term. Sanjeev Bhasin from IIFL Securities on the show right now. Sanjeev, hi, good morning. Just such a quiet lull in the market. What are we staring at in the near as well as the medium term next?
Yeah, good morning, Aisha. Firstly, to all your viewers, a very, very happy Raksha Bandhan, and to all of you. Well, the lull is before the storm. The Argentine, the worst performing index, is up 236% year to date, and on a one-year basis, 360%. And I think emerging markets are just on the verge of a big breakout. India has had consolidation due to the overweight, weightage of Reliance and HDFC Bank, but I think it's coming back. Yesterday, you saw a glimpse of that on specialty chemical. China's stimulus package is now much awaited, which has seen US bond yields have the biggest fall yesterday, which says that all Fed, future actions are getting discounted, and you will be having a Christmas where there could be a Fed rate cut. So I think this is the best time to be in equities. Aside from the index, I had previously also told you this expiry will be 19,500. And next week, God willing, on Wednesday, I'll have tea with you in the morning in Bombay studio at 20,000.
Right, well, cheers to that, probably, Sanjeev, and look forward to having you here. But also curious to get in your take on one sector that was really a buzz yesterday, and some of those chemical stocks really had a terrific run. There is some rationale as well with respect to pricing and the China plus one factor. Your take, do you like any names?
Yeah, morning, Awan, definitely. And you had to be contrarian to pick up SRF and Navin Fluoro. We have stressed on two stocks, if you recollect, in the last 2 months. Chemplast Sanmar, the biggest maker of PVC resins, and Jubilant Ingrevia, the erstwhile VAM Organics, which later got spun off and now is one of the biggest players. Particularly, they're getting a lot of business from Europe. And both these stocks, by the way, have hit all-time highs in the last 2 days when the Nifty has done nothing. So I continue to be very favorable on Jubilant Ingrevia, Chemplast Sanmar. As a disclosure, these are two of our top holdings. And I'm very, very bullish on Tata Chemicals, SRF and Navin Fluoro.
I want to get you in as well. On the charts, which are the chemical stocks which are looking the strongest?
So as a pack, I think there are multiple names which are looking good. Tata Chemicals yesterday managed to give a breakout, and we were discussing this on Chartbusters that how the stock has come out of 8 to 9 months of major consolidation. So that augurs extremely well for the stock. So the major point over here is that these chemical stocks are very, very high beta in nature. So these stocks, they have a tendency as well as capacity to rise up 20, 30, 40% in just a matter of couple of weeks or in a matter of 1.5 odd month. So when these stocks consolidate for 8 or 9 months, it's completely different than their inherent nature for themselves in terms of the price structure. So I believe that Tata Chemicals could be one of the stock in that regards. Deepak Nitride is something which has managed to give a very strong breakout. The stock has come back above its 200-day moving average, forming an inverted head and shoulder pattern on the charts. SRF for the first time, I think if I'm not wrong, over the last 2 or 3 months has broken past above the 200-day moving average. So that's also a confirmation of a strong breakout. And from the mid-cap names, Lakshmi Organics is something which looks attractive. That stock over the last 2 days has seen almost a 10% up move, indicative of a major turnaround for the stock over the near to medium term.
All right, meantime, Naresh, let's get in your take on Piramal Enterprises. It's been in the spotlight of late at 1,060. What's your outlook? And have you had a look at the charts of something like a Dabur India?
So Piramal Enterprises is looking promising from a short-term as well as a medium-term outlook. The stock after the demerger continued to correct, and back in 2022 and 2023 start, 900, 950 was a problem. Once we've crossed above that with a big gap up, the trend has changed for the stock. Did a retest almost of 950 levels a couple of weeks back, and the stock also has a buyback going forward. The viewers in the near term, 1110, 1120 has been the top for the last 2 months. If it can cross that, that would be further breakout. But at current levels, it's a buy with a stop loss below 1,000. And I would expect eventually to go and cover back towards 1250 levels for the stock. So it looks very promising.
Sanjeev, the other pocket which has been really flaring up of late is the entire cap goods space, right? I mean, led of course by L&T, but look at the move on some of the other names like a BHEL, for instance. What do you like from within here?
Correct. The most hated share in the stock market in the last 2 years is the biggest gainer. Who thought 25 rupees will be 50, 75 and now not willing to give up. And Aisha, it just tells you that, there's a saying, every dog has its day. Just as the Argentine index, the capital good mid-caps are playing out. A little bit of caution there. Stay with the big ones. Siemens, Bharat Forge, if you can term that as a capital good, Siemens, Bharat Forge, L&T, Thermax, and ABB. These are some of our preferred picks which are in our portfolio as a disclosure. We are not going overweight on them. We are staying put. But like we said, these are the themes. And that is why you can see that green shoots emerging on the capex side after 20 years tells you that there's a long way to go for, the whole economy to start showing you much better number and colors.
Basin, this is Anisha also joining in the conversation. I was just looking at the YTD performance, and the sector which has done the best this year is real estate pack. Which are the stocks you like from that?
Morning, Anisha. My pick over there and a dark horse play is IRCTC. The rest have all run up fairly high, whether an RVNL or an IRFT. I'm not chasing those. I can tell the investors that there is no better business than what IRCTC is in. It had an overhang of a stock when the government diluted some equity in December of last year at 680, and from there it has refused to go up. But if you see the type of ticketing, the near NER water business and the catering, this is poised to go places. I'm giving you an 800 rupee target maybe in the next 6 months, but I'm telling you the business is superb. So, just stay with the business which it is in, and IRCTC can be a huge dark horse, at least a 30% upside in the next 1 year.
From the railway pack, Mr. Basin, what I was asking you was also on the real estate pack and the realty stocks.
Well, Godrej Property and DLF refused to give up. Those have been two of our top picks, and they are already up more than 60%. We want to be with the big players. Yes, there is a lot of run up in the small names. If you recall at 115, when all doom and gloom was there on India Bull Real Estate, I stuck my neck out that there is no promoter. Hence, this stock can be a huge outperformer. Now, don't chase it at 190, but look for some ideas which are there. And I continue to think DLF and Godrej Property are the biggest of biggies, and you should be focused on the large caps rather than try and chase some extra beta or extra delta on the smaller ones.
Okay, fair enough. That's a view coming in on the entire real estate basket. But curious about your take, Sanjeev, when it comes to some of these new age tech companies. For instance, Zomato has been in the news of late. What's your outlook as to how you're looking at the efforts for path to profitability for a lot of these companies, and what would be your picks?
So, Avan, Zomato, Paytm, and PB Fintech have three stocks which are in our portfolio. We have been adding them in the last 6 months, and we don't intend to do any short-term profit booking or trading in them. These are 2, 3, 5-year ideas, and I think there is miles to go before I sleep. You've seen a lot of the old hands change, ownership here, which is very positive. But just look at the businesses, all three of them, Zomato, Paytm, and PB Fintech. And my advice to the retail investor is don't look at the lows, because you'll never able to make an entry. Look at the highs. And then you will think that these are still businesses which have enough potential of giving returns. So, like I said, as a disclosure, all these three are in our top picks. We continue to be very, very favorable on Paytm, PB Fintech, and Zomato on declines. But we think that, like we said, these are businesses for the next 3 years, and there is no short-term view on them.
Sanjeev, have you taken a look at Suzlon? I mean, that stock from a single-digit penny stock has moved all the way up to $24 now.
Well, that's the power of restructuring the balance sheet, ownership change, and Aisha, the magic of mid-cap money which is being chased by mutual funds who have lagged in returns. And read my lips, the last 7 months, these guys were sitting on more than 7% cash. And now with the left out feeling huge and humongous, they are chasing high beta ideas. So at this time, my call would be, I am more bullish on large cap stocks. So I am chasing the likes of LTIM, Reliance, Apollo Hospital, and the largest banks, ICICI Access. Those are 5 of my big ideas here. If you have Suzlon, stay with it, but don't chase it at these prices when a stock has already tripled.
We'll also be focusing very closely on the entire auto sector with respect to the auto sales numbers, and reports from the likes of Jeffries and Nomura seem to be indicating that this time around we could see a healthy growth. 9 to 12% is what they're pegging in for the most part for the likes of Ashok Leyland, M&M, and even a Maruti, saying that passenger vehicle volumes for the industry are likely to be higher by about 9%. Two-wheeler industry volumes is likely to be a bit sluggish, so lower this time around. MHCV could see a double-digit uptick, close to 20%. And for tractors as well, it could be a bit flattish. What has been your assessment of how things have shaped up within auto, Sanjeev, and what is it that you're penciling in for the sales numbers?
Well, Avan, we are on the anvil of a very superb festive season. The rainfall has been rather splendid, except for the month of August. And I think that rural incomes are now going to charge up some of the two-wheelers. So 3 names which we are holding and which we are advocating: Maruti in the passenger vehicle, Ashok Leyland in the CV segment, and Bajaj Auto in the two-wheeler segment. All 3 in their categories are market leaders and will only gather momentum. In the mid-cap, if you want, you can chase a Bosch closer to 18,000, because in the OEM space, that is one stock which is pedigree and which has initiated and invested large amounts into semiconductor, the returns of which will be played out maybe in FY24.
Okay, hold that thought, Mr. Bhasin. In the meantime, I want to bring in Naresh as well for his view on a couple of these counters. Naresh, for the month so far, we have seen quite a bit of run-up on Kalyan Jewellers. That stock is up 30% this month. No incremental news flow as such. And then JSW Energy, despite that solid run that we have seen so far this year, that stock just continues to climb.
So Kalyan Jewellers continues to be in a strong trend. So even if you look at yesterday, the stock over the last 6 to 8 sessions made a flag formation and made a fresh high. So in such a case, all one can do is keep a trailing stop loss and write it on. So now the trailing stop loss will be 215. So the trend is still positive. The next say target would be closer to 250. So out here, right on to the move. JSW Energy is an interesting stock because if you look at it from the perspective of what happened over the last 1 month, yes, it has gone up from 300 to 360 odd levels. But if you look at it from the last 2 years, the stock topped out back in 2021 September, roughly. And that time the stock was at 390 rupees. So the stock has done nothing from those point of time. And there were multiple tops in 2022 around this 365, 370 mark. So sustaining that, it actually opens up a move towards a new all-time high. So trend here is strong, and what we see is it's not just JSW Energy, it's the whole power segment which looks promising, power and related power. So we've seen NTPC do well, as well as the NHPC, as well as even the smallest of the power names. So the trend is strong, could continue in this trend for the next, say, few months as well.
Actually, in fact, on the power stock, Mr. Bhasin, what's your top bet?
Well, Anisha, we've held REC PFC for the last 2 years, and we are not changing our view on both the power lenders. You've seen power distribution companies do the best, and recoveries, particularly on state electricity boards, are the best ever in history. In fact, where I stay in Gurgaon, DHBBNL has declared a dividend first time in 30 years, which tells you PFC, REC are in the best place ever on the lowest cost of fund. My dark horse play is again IEX. You cannot have a trading platform, even though there will be competition which has 93% market share, lose, trade at this valuation. I am looking at volumes growing at not 10, but 12, but 15 times, maybe more in the next 3 years. And the platform is brilliant. So you can't have a better play than IEX. Avoid the noise. This is the time to be in IEX and IRCTC, which are 2 brilliant blue chip businesses. Now, the businesses can underperform for some time, but the longer term story on IEX in power and IRCTC on railways is the best you can play on the Indian PSUs.
Okay, fair enough. That's the view coming in. Meantime, Naresh, let's also get in your take, just going by some of the smart movers in yesterday's trading day within the broader universe. Chart check on a BEML that shut up very smartly in trade, and you've also got something like a Deepak Nitrite and the entire cluster of chemical stocks that were abuzz. What's your preference?
So I'll start off with BEML first. Now that's a chart which is interesting if we look at the last almost 15 to 18 years. The stock was one of the best performers in the 2002 to 2007 rally. That's the time it topped out at 1800 to 1800, 1850 levels. Then again it fell all the way to sub 200 levels by 2013, as well as in 2008 it was at 400, 500. Again went back to 1800 to 2000 in 2017. Then in 2021 also it topped out at 2000, and now we've broken out. So it's like a 15 to 18-year breakout, which could ideally mean the stock continues to do well over the next 1 to 2 years. So very promising charts here. Any dips back to 2300 to 2100 remains a long-term buy. Could surprise on the way up. So a trending stock after a 15-18-year breakout. Going to chemicals, I would term yesterday's move as a one-day move as of now, because what we saw is huge moves across the chemical space, whether it was small cap and mid caps. But if you look at the little longer term structure, we are still negative in terms of the trend. So if you look at Deepak Nitrite, 2300 to 2400 has been a problem for the last 2 years. Yesterday's move was very large volumes, lower delivery volumes comparatively across the chemical space. So I would expect some bit of a fade off today, some bit of a dip going forward. So not looking to buy right now, would wait for a dip for chemical names as of now.
Those are the top bets from the chemical basket. But the other space we'll be watching out today is the credit card companies, the likes of SBI Card and even Axis Bank for that matter, because in the month gone by, the issuance of credit cards from Axis Bank has been actually quite strong. In fact, for the overall industry, we have seen a historically high spending and a growth of almost 5.5% month on month. Let's go across to Sharad to get more details on this one. Hi, Sharad.
Well, yes, in focus we are having at first Axis Bank as well as SBI cards, and of course do remember Axis Bank has issued the highest number of credit cards. This is coming in for the month of July, almost 20% of the cards, and while for SBI cards itself it's coming at almost 18%. Now the important thing is that SBI's market share is almost at 19.5%, and that is actually stable if you look at it on a month-on-month basis. And even ICICI Bank, if you look at it, they have witnessed the highest month-on-month growth in spending. Now what the brokerages have been bullish on this space, and Morgan Stanley has stated that the daily spending data, which was actually reported by RBI, suggests that the year-on-year growth in August has actually outperformed, and it's better than the month of July itself. Now what this sets up is an important spending pattern we can expect in the festive season. Now for Jefferies also, among the key players, ICICI Bank and Axis Bank's spend share has improved, while HDFC Bank's spend share that has actually seen a drop. Lastly, SBI Card's spend share was tad lower if you compare it on a month-on-month basis. InCred also came out with this view, and they have stated that this is the highest ever spending, indicating the strong demand coming for the festive season. And the credit card loan growth itself, they have stated, is faring well despite the rising interest rates. Now what happens is that declining interest rate cycle, once that starts kicking in, it becomes beneficial for the card companies, and also they gives a strong margin advantage. And lastly, InCred has also stated that they remain optimistic on the overall credit card business in India. So this actually sets up a very strong pattern, especially going ahead in the festive season.
Thanks very much for giving us that heads up. So clearly seeing record credit card spends as everyone moves digital. But moving right on then, let's also find out what Dipan Mehta is betting on, some of his top mid-cap ideas. What are they? Listen in.
Our preference is for good quality engineering companies in the private sector, and with disclosure that we and our clients are invested, companies that would fit that criteria, like Larsen & Toubro, Praj Industries, VA Tech, Vabag, SGEC, IS, GEC Engineering. And what's the common thread? I think great track record, good management of the balance sheet, high return on capital employed, and some good quality work which they have done. You could add ITT cementation also to that list. So from that perspective, our focus is more on good quality businesses which have stood the test of time and which are still available at reasonable valuations.
Okay, so those were the top recommendations coming in from our funda experts, but we still have Mr. Sanjeev Bhasin with us. Sanjeev, you were quite positive on the mid-cap IT names, the likes of Coforge. Tech Mahindra was one of those brilliant finds which has done very well for the investors. What next in the IT sector that you're watching out for?
LTIM, the best play which is going to be star as far as the AI circle goes. and which is seeing huge amount of order inflows and high margins. Their attrition has been the lowest, and I think LTIM is one large cap which I can now bet on because it's on the index. So like I said, Anisha, I am focusing on large caps in the index. LTIM, Reliance, ICICI Bank, Axis, which you mentioned the reasons. And if we are going to see Bank Nifty expire above 45,000, then both these large caps have to join. But LTIM is my stock for this from here till Diwali. 6,000 plus is coming on LTIM by this Diwali.
6,000 on LTI Mindtree, so almost 1,000 rupees what Mr. Basin is pointing by Diwali itself. So just in a couple of months, probably you're in for making $1,000 there. So that was the take when it comes to the IT counters as well. But shifting focus and talking about what else is happening in the market, and of course we have seen that recently defense stocks have been doing rather well. The entire manufacturing theme is something which is picking up. Sanjeev, wanted to get your take. Would you bet on the likes of Dixon, Amber, even Voltas for that matter, which was one of your picks earlier, or would you stay away from the manufacturing theme because all of these stocks have run up?
Correct. A little bit of caution, Anisha, because the momentum is very strong and you've seen the mid-cap index, the small cap all outperform. As a disclosure, Voltas from 750 has been one of our top picks. It continues to be. It is not just an electrical play. It has huge order inflows in the Middle East, and we think that is one place where Voltas can outperform. But like we said, we are of the opinion that large caps give you a better opportunity, because if I'm looking at 20,000 coming, then I think it will be large cap which will lead. So LTIM, Apollo Hospital, Reliance, ICICI and Axis, these 5 stocks should make up your portfolio for the run up to 20,000.
Enough. Meantime then, Sanjeev, take us through your view on the entire consumer sector, given that valuations are fairly rich. What's the outlook when it comes to the earnings forecasts?
Well, you rightly put it. Earnings are rich, and maybe there is a little squeeze on margins given that interest costs have picked up. But I still think Godrej Consumer, which has been our pick from 650 levels, is going to be an outperformer. And I think that on declines, you know, this Marico, this is one stock which I am very, very bullish. So Godrej Consumer and Marico will make up my 2 stocks in this consumer durables place. On the consumer discretionary, I would still, go with the Maruti in autos. Maruti can be a 12,000 stock. And yesterday you heard from the management that in the next 8 years, there's a capex of almost 50,000 crore, which they are putting on the anvil. So, you know, when big corporates put money where their mouth is, they are bullish on the longer term. And I think that 12,000 on Maruti can easily be achieved by next Diwali.
We're going to have Shashank Srivastava as well from Maruti Suzuki India AM to talk about where the picture for Maruti lies ahead. That conversation coming up at 10 a.m. And as also, we will be addressing the buzzing chemical sector, but none other than the MD and CEO at Tata Chemicals. He joins us today at 9:30 a.m. R. Mukundan to talk about the picture for chemicals and whether the street is right in giving it a bullish record. That, of course, is Shashank Srivastava, but we'll have R. Mukundan as well join in from Tata Chemicals right at 9:30 a.m. I'm sure you don't want to miss that conversation. But Sanjeev, since you have been so bullish in Reliance Industries, I wanted to understand why so? Because the drawdown from the AGM has been a little unimpressive in terms of the short-term triggers being a miss. We've seen how the stock performed post the AGM, and disappointment followed through yesterday as well on RIL.
Well, Aisha, that's a little bit of consolidation. What did you expect at the AGM? Another bonus or some big announcement? They have told you that the capex on the oils to chemical is fully played out. That is being shifted. That is a realization as a cash cow now. The capex on the 3G and on the 5G is almost complete. But look at the longer term. On September 19th, they will launch the 5G in every household. Now, there, like I said, Mukesh Ambaniji's vision is not of 10 or 15. He thinks of 150 crore people. And the annual of Geofinance and the succession was what most people were, more clouded on. But the underlying businesses, whether a Microsoft tie-up or a Blackstone or the way forward on 5G and the market share gains which they have done in telecom. So Reliance is now only not oils to chemical. It is all about 5G. It is all about retail. and you will slowly but surely hear the outcomings of that. Yes, the stock may have underperformed, but if we are going to 20,000, then Reliance is going back to 2,700.
The index is going to 20,000. Reliance will have to play a part in 2,700 levels is what we can expect on Reliance Industries. That's the word coming in from Sanjeev Bhasin. But Kunal, your take on Zee Entertainment. Of course, the stock is going to be volatile today on account of that SAT hearing that we're expecting at 11 a.m. Any trade ahead of that? And the second one I want to discuss with you is Emami, because while the FMCG index has been fairly flat of late, Emami has been a big outperformer, almost 30% higher.
Yeah, so I think Zee would be something which I would be keen to buy, especially I think if the stock goes into a negative reaction. And I think if it manages to come back closer to 250 mark or slightly below those levels, so a 5%, 7% drop on Zee could actually be a good retracement to buy the stock. It's been a classical breakout for Zee. The stock from 170 has moved on a very straight line trajectory towards 270 mark. So this is a range of consolidation or a dip which should be bought into for Zee Entertainment. So I'll wait out for that. Emami on the other hand, again a very similar kind of a chart. The stock has moved from 360 to 540. It's a completely different reaction, as you rightly said, with respect to most of the other FMCG stocks. The stock has not yet confirmed a swing breakout in the charts. I think the previous swing high for Emami was closer to 550 for the stock. The major high for the stock was around 650 levels, which was I think 2017-18 for the stock price, which means that there should be more meat ahead for the stock over the near to medium term. So I'll wait out for two important targets for Emami on the upside: 550 as a very near term and 650 as a more medium term.
If you can just bring up the chart of Emami, because that is the stock recommendation coming in from Kunal, and he just observed the levels on Emami. That stock up for you on your screens. And of course, there's that note from Novama as well this morning. 521 is where that stock has opened up in the pre-open rates. For the markets, it seems like a little bit of an aberration, because much unlike what the GIFT Nifty was indicating, it's a 0.5% downtick of a start. We'll give these rates a skip and let them settle down a little bit. Sanjeev, you were talking about your picks from within the railway pack, and you mentioned IRCTC. I wanted to understand about defense, because many believe that a large part of the rally is already behind us in the defense names. What's your view here?
Correct. I'm in that camp. I'm not going to chase HAL or BAL. They are in our portfolio, but we've skimmed down our portfolio in them and we've taken some profit home. The order flow may be strong and the outlook very bullish, but the execution will take time. Plus, if the China one factor plays out and you see a rally in commodities, then that could definitely hurt margins. So stay away would be my call. Don't get chased by the momentum. There are enough other like ideas which I've given you in the large caps, which fit the bill perfectly if you want to stay invested. But like I said, these have run up far in excess of what the returns and the risk reward may not be favorable here.
All right, let's shift gears. Thanks so much, Sanjeev, for sharing with us your stock ideas and views on the markets. And yeah, Aisha pointed out pretty lackluster for the pre-open trades, but let's find out what our chartists are betting on by way of their mid-cap recommendations. Naresh, what's looking good?
So continue to like NHPC, and the whole power space looks interesting. NHPC has been consolidating after the breakout here. The stock has been making a very tight range of almost a 1 rupee band for the last 1 month. A previous high around 50 to 53 levels. Expecting this to break out. The stock is back into the momentum after almost 10 to 12 years of listing. A short-term target price of 60, stop loss at 48.
All right, Kunal, what's on your radar today?
I'll go with a buy on GSFC. That's a stock which I think 170 looks extremely attractive. So, just to give a like-to-like example, GMDC was a chart. The stock was hovering on the 180-90 mark. The stock fell by 15%, corrected in a very short span of time. And from there, from 180 odd levels, the stock had come back towards 260. I would probably sense similar kind of a pattern shaping up for GSFC, trading at 170 plus mark. Would suggest a buy with 200 as a target. Stop us at 164.
Let's move on and let's tell you what else is happening outside the world of equity markets and on to retail giant Walmart. Now, reports are suggesting that the company is asking some 16,000 pharmacists across the US to take voluntary pay cuts by reducing their work hours. Now, the move comes amid their efforts to lower costs. The set cuts are aimed at pharmacists who fall in the higher wage bracket, highlighting the new pressures at Walmart pharmacies. Also shifting focus to cryptos, a federal appeals court ruled that the US SEC must review its rejection of Grayscale Investments' attempt to launch the first Bitcoin ETF. The legal victory now paves the way for a spot Bitcoin ETF, which of course advocates have long argued that will generate more public interest in the crypto assets without having to buy it directly. Also, back home, the Pragyan rover has made its first discovery on the lunar surface. It has confirmed the presence of sulfur and even oxygen and some other minerals as well. Whereas ISRO says the rover is now hunting for hydrogen.
In the meantime, the much-awaited Men's Asia Cup is set to commence today with 6 teams set to battle it out for the coveted title. The championship's first match is scheduled between Pakistan and the debutant team Nepal. The tournament, which is being co-hosted by Pakistan and Sri Lanka, will go on till 17th of September. Meantime, legendary investor Warren Buffett turns 93 today, and as his tradition holds, he donated $27 million of Berkshire Hathaway stock to an unnamed charity days before his birthday. This donation is in addition to Buffett's annual gifts to the Bill and Melinda Gates Foundation and 4 other smaller foundations run by the family. And he's celebrating his birthday today, so best wishes from ET and our family as well.